Hey everyone, Juan Huizar here. I'm excited to have Edi Santos with us today. Edi has an amazing story. We're going to be getting into SBA loans. So if you're a commercial owner and you're renting, we're going to tell you why you should no longer be renting, why you should be buying your building. Edi's going to give us the path to how you're going to do that. You might be wondering what the statue is. This statue is the arm of a dictator, and that structure was toppled over. Make sure you stay till the end, and we're going to tell you who it belongs to, where it came from, and more importantly, how Edi was involved. And so make sure you stay till the end. You're going to love the story. Let's get into the interview. So I'm here with Edi Santos. Edi and I, we're both in Long Beach.
Yes, we are.
Edi specializes in SBA loans, and we're going to dive into the very basics. But before we do that, Edi, tell us a little bit about your background in banking, and then even before then, just a little tidbit so people know who we're sitting with today.
Absolutely. So my name is Edi Santos. I was stationed, actually, believe it or not, here in Long Beach in Terminal Island at a unit called 3rd Anglico. We're an airborne division unit, and we are designed to jump out of planes and support other special forces from other countries to call in airstrikes, close air support. So I did that for 8 years in the reserves program, but I did go to Iraq in 2003, came out as a sergeant. And then when I came out as a sergeant, I went to college, and then I started working at Bank of America, worked at Wells Fargo twice, and then now I'm an SBA officer. So I do SBA lending specifically. That's all I do now.
Edi, thank you so much for your service. Thank you for what you've done, and let's get into it. So let's go for the very basics. So for those of you, I know this video is going to be a little different, is typically we teach people how to grow their wealth through multifamily. This is how to grow your wealth through commercial real estate.
Absolutely.
Okay, so one of the avenues is that there is a government program. It's a government agency, and it's the Small Business Administration.
Correct.
Tell us why the government wants to help business owners either, in this case, we're going to focus on the real estate, more so on the borrowing. Okay, so why is it that the government wants to help a business owner buy the real estate?
Right. Well, it's a great question, and it's a very fundamental question as to why the SBA exists, right? Why does the government want this? Ultimately, when a business owner is able to buy their commercial property, a lot of things happen. One of the main things that happens is that the customer is more willing to invest into that property, make household improvements, tool that property to the specific specifications of that business so that it can grow. Number two, it can also help the business expand, maybe get more square footage, therefore hire more employees, buy more equipment. So the government kind of understands that if the business owner owns the property, they're going to invest into it, and if they're going to invest, they're going to create more jobs. And so what does the government want? They want people to have more. It's all about job creation. So when we get an application, that's always one of the critical points. How many employees do you have now, and how many will you have because of the SBA loan?
Got it. So what this is the government knows that there's a little bit of a domino effect in our economy. Mm-hmm. Jobs, more people spending money, either on rental property, going out to eat. The consumers are out there spending money at the malls. And so this is a very good thing. And so for that case, they have a special program for business owners. Now, I want to make this really clear because we did this video 4 years ago. And the question that we got over and over again is, do I already have to have an existing business? And so that's going to be the first question.
Yes.
It needs to be an existing business, correct?
Well, it does need to be an existing business, but it can also be for a startup. And this question is very complicated. The majority of business owners require 2 years of historical cash flow to support that loan request. So if you have a business that's been around for 2 years, has been leasing, we can look at the cash flow from the last 2 years historically to qualify for the new loan. However, let's just say somebody has an auto shop. I've been working for this owner for years, and I'm the manager. I want to start doing my own thing now. But I have the experience, the expertise, so I can create a business plan and request for an SBA loan to get that project started. Now, if I want to buy the commercial property, then we can create projections. Very rarely does that happen. The bar needs to be a little bit stronger, but it does happen.
So it sounds to me like in this case, so someone has an auto shop and someone is the manager or working in that field, and maybe they're going to come to Edi or someone like Edi and they're going to say, can I get an SBA type loan? And I think what the bank is saying is if you remain in the same field, we'll definitely look at you.
Absolutely. Well, the experience is everything. You know, if you have the experience, you've been doing something for 5, 7, 10 years, the probability of you being successful in that business is going to be relatively high. So the underwriting process, they're going to look at your resume. And if you have that experience, it's going to put you in a really good highlight for an approval.
What type of SBA loans are available for business owners?
So this is a great question, and I'm glad you're asking it because I do what I do. I'm very, very specialized in the SBA 504 program. There's the 504 program. There's the 7A program. They're both for commercial real estate.
Okay.
The 7A can be utilized also for acquisition of equipment, to buy out a partner. The SBA 504 is not for that. Then there's also other SBA Express programs. An Express program is a smaller loan, line of credit, that type of thing. Now, the 7A can be used for a 10-year term for an injection of capital. You buy equipment, you amortize it over 10 years, or you buy commercial real estate and then you get 25-year amortization, right? Because it's commercial property. And same thing happens with the 504. It's a 25-year loan, right? 25-year fix. So when people talk about SBA lending, I just got a call today. Someone's asking me for an SBA loan. My question was, is it for commercial real estate? Is it for injection of capital? For working capital? I don't manage these. I don't manage the Express. I don't manage the 7A.
Right.
All I do is 504. I'm very, very specialized. But I'm partners with these gentlemen.
Now let me ask you, so just, does the 504, that has to do with commercial real estate purchasing?
Exactly.
All right, so we're gonna stay on that topic because that's what we're trying to do today. So, what are the requirements? So let's just say a business owner is watching this and they're like, I'm tired of paying rent. And by the way, listen, if you watch my channel, I don't want anyone to be a tenant in anything. I don't want you to be a tenant at an apartment building. I don't want you to be a tenant if you're leasing space for your business, okay? Why? Because we know that real estate appreciates, and our channel is to teach you how to build wealth, and this is one of the avenues. And so if you've been watching our channel and maybe now you own your first small income producing property, but you're a business owner and you're leasing space, you are the person that I want to try to get this message across is tell us the benefits and kind of why it's so beneficial. And I would say somewhat, this is catered for a business owner to acquire real estate.
Absolutely.
And what's the process? What's the down payment? Okay. What are they going to ask to see?
Absolutely. So one of the first things I want to talk about is what are the benefits to owning the property, right? I mean, we've seen the inflation just go out of control in the last 3 years after COVID. And I see a lot of business owners who their leases were up and they jumped up dramatically. So these owners they weren't planning for that fixed cost to increase that much. So owning a commercial property with an SBA program where you have a 25-year fixed loan on my portion, you're basically going to pin your payment, right? That payment's not going to change for 25 years. So that's a huge benefit. Prediction of the future. No matter what happens in the market, you can be sure that payment's going to stay there. Second thing, obviously, you have depreciation on $1 million property over 25 years. You're going to offset that. You're going to be able to offset maybe other things, maybe like your interest expense and whatnot. So there's a lot of benefits in regards to that, right? The other thing about it too is that when you buy a commercial property on the SBA program, the most simple ABCs of the SBA 504, number one, it only requires a 10% down payment. That is huge because properties here in California are expensive. You know, $1, $20, $15, $10 million. Nobody typically has more than 10% to take out of the business working capital to invest it. So a 10% down payment is probably one of the most powerful things. The second powerful thing is a 25-year fixed amortization. The third thing, it's really much easier for us to qualify for the loan. The SBA is very lenient, where our cash flows requirements are very low. We can create projections for the client. Okay. And remember, the bank that does 50% of the loan, we do 40%. The bank is guaranteed by the government on that loan if it defaults. So the bank is only at 50% risk, right? So the banks would much rather do a 504 loan from a risk perspective where they're guaranteed by the government and they have a low LTV. Does that make sense?
Yeah, it makes perfect sense. The reason why I love this, so if I'm sitting down with an investor and we're looking at a, say, 8-unit building, okay? That 8-unit building right now, depending on how much income it brings in and the ratio against the price, they might be putting 50, 60, or 70% down on that type of property right now, given where the interest rates are at. Eddie just finished saying that you, the business owner, can qualify for a commercial building that you could buy with only 10% down.
That's correct.
So it's massive. So what I'm saying is that if you're in a situation where you own your business, it's so beneficial to say, I'm only going to put 10% down. I'm going to borrow 90%. So that's a huge bonus. Right. The second thing he said is that 25-year payment is fixed. A lot of times, if you've been watching my channel, I tell you to buy your first fourplex or duplex or triplex. Why? Because it's fixed for 30 years. And what I'm telling you is you're capping your biggest expense. And in the scenario that Eddie just gave us, he's right. If I'm a commercial landlord and I have a lease with a business, I might like the business, I might like the tenant, ultimately I'm gonna raise the rent, and rents keep going up.
Right.
And so in this scenario, it's very little down, which is what makes it special, 10% down. And also it's the capping of it, which makes it really, really important. We've seen, Eddie, time and time again, and you deal with more people in this world than I do. What ends up happening when you talk to someone maybe 10 years, 15 years after they've owned the real estate? Like what are you seeing?
It's almost like they're so happy that they have equity in their property. They've been able to borrow against the property for working capital. They're helping them grow. They see their net worth go up. So, I just constantly, they're just so thankful that they actually discovered this program because of the benefits of appreciation and whatnot. And then some of them have expanded to multiple locations. Once they know the program, I have clients who have multiple locations. Insurance company, for example, they have 6 different locations. Each one of them, I help them do an SBA loan.
So in this scenario, you have an insurance company, and they're smart enough to use an SBA loan at every single location.
They did the first one, and then they figured it out, and then they had a rental property. They were renting the other one, and they said, Eddie, we want to buy another property, and then we just basically started doing a bunch of SBA loans for them.
And what's in this specific scenario, what ends up happening is when they look to retire, now they have 2 things to sell. You have the business that they grew, and someone's going to pay because it's an income producing entity. And then you have the real estate that either you could sell or you could just rent back to the person you just sold the business to. And then now you have positive cash flow. So you're going to see a lot of correlation with owning real estate and owning multifamily. There's a lot of similarities. Now, granted, this specific one requires that you own a business.
Correct.
And that you go and you purchase something.
Correct.
Talk to us, Eddie. So someone's watching this video right now and says, what's the process, Eddie? Like, where do I start? What's the process? What are they going to ask to see?
Right. Well, first of all, before we move to that one, please remind me of that specifically. I want to make it very clear that this is for owner user, right? Meaning that you have a business, you can occupy it. I'm not going to get a call. I don't want to get a call saying, hey, Eddie, I want to have a 5-unit apartment building, 10% down. Let's do this. That's not what the program's designed. Yeah. That's spectator investing, which is what we were talking about earlier. This is specifically, you want to buy a commercial property for your business. The requirement is that you must occupy 51%. You can rent out to 49. That's not a problem, but you have to meet that 51% criteria. So that's the minimum. That's really, really big important because I do get a lot of calls. People want me to finance rental properties, and that's not what I do.
Yes. And I'm glad you said that. So the biggest points are 10% down, and Eddie's right. You have to occupy 51%. But and that's very important. The appraiser actually measures, and underwriters are looking at this to make sure that that's the case. Let me give you guys an example. Where we film right now, this is it's a commercial condo, and we have a few of these in Long Beach. Some other cities, out of state, commercial condos might be a little more popular. There's only so many in Long Beach. So this is one where I was able to do an SBA loan on. And because now listen, you could say that, hey, Juan says a lot of things and has a lot of beliefs when it comes to real estate, but I'm actually walking the walk. So
true.
When I decided to branch off and have our own office, leasing from somebody was not an option. And so luckily, someone told me about the SBA program, and so we bought one. And we're inside of it now. Now, when we started expanding as a business and we needed a second one, I did not realize. And so we ended up buying the condo next door, and I didn't know this, but we were able to get a second SBA loan.
Absolutely.
Now, in both of these scenarios, I occupy 100% of them because I really can't subdivide it. I wish I could because I would love to have a tenant, but that's not the case.
Right.
And if we keep growing from what you're telling me, I might qualify for a third office.
Oh, absolutely.
Yeah.
Absolutely. And then let's talk about maybe a little bit about the parameters, right? Because the maximum, when we have $1 million purchase, the SBA is going to do $400,000 loan on that project. The bank's going to do $500,000, and you're going to come in with your $100,000, right? Correct. Now, on that portion, we call it the second trustee. Not to get into details, I don't want to get too complicated here, but the maximum that you can do on my 40%, it's $5 million or 5.5 year manufacturer. Got it. Now, you can once you do that and you maxed out and you bought the property and you say, hey, I maxed out my 5.5, you can get an additional $5 million and an additional $5 million as long as you go green on that property. either solar panels, energy efficient. So really you have about $15 million available to you, or 15 or close to $60 million available to you if you really want to maximize the 504 program. So it's pretty massive.
Right. Eddie, tell us, because you're here servicing business owners and acquiring their real estate, what type of industries do you see utilize this the most? Like what's the most common that you see?
You know, it's always funny because I try to go back to my list, but just an example: auto shops, dentists, doctors, attorneys, barber shops, hair salons. I mean, manufacturing facilities, big distribution centers. I mean, really, there's nothing that we cannot do except we have to be for profit. We can't do churches or any 501c3s. So as long as you're for profit and you're not involved with marijuana or CBD, this is a federal program, so those things are not qualified. But pretty much it's across the board. I don't. Yeah. Sometimes people get really tied up in very niche. They do only storage. They do a lot of storage because they understand the writing. But we, hotels, you name it, and then so it's not limited.
So pretty much, he just gave you a slew of different industries. I mean, if you're in the medical profession, you should be buying it. If you're a professional, if you are watching my channel and you're in the world of real estate and you're the real estate broker and you're leasing space, give Eddie a call. Find out, why are you leasing space when you could be buying something? The payment's going to be fixed, and ultimately it's going to appreciate, and you're going to have another asset to control. Mm-hmm. Let's go back to the application process.
Yes.
So like what would someone need to prepare to kind of get things started?
You know, I work with a lot of brokers and a lot of bankers. And I think the first thing that business owners want to know is, A, do I qualify?
Yeah.
You know, very simple. Eddie, can I qualify? Is this a pipe dream, you know? So I have clients who are paying $5,000 a month. They know that they can make that payment. So like they would like to buy a property.
They're paying $5,000 a month as a lease.
As a lease.
Okay, so that's the example that we're going to move forward with.
So obviously if I use my financial calculator, I can pop it back in there depending on the rate. And, you can qualify for me about $1 million, right? But what I really do need from the borrower, it's not very complicated. I just need the 2022 tax returns and a 2023 draft of your profit and loss statement. Those two things are going to help me to see how much cash flow the business is generating, to see if it can support what amount of loan. So it's a pre-qualifier, So I can come back, I run those numbers. I also want to get just a list of all your business debt. So we crunch numbers. If I get this in the morning, by the end of the day, I'll have a pre-qual letter. I mean, that's how fast we move. And then once you have that letter and the client sees, hey, this is doable, this is what my payment looks like, then that's when the wheels start turning, like, wow, this is actually exciting. Then I start working with the brokers, and the brokers get more confident about making that offer.
Let me ask you a question, Eddie. So what you just detailed is really not that hard of a process to find out. And it's very interesting because although we're kind of servicing different types of clients, my people want to know, do I qualify? And we always tell them it doesn't really cost you any money, right?
No, it's free.
It's free. It's free. So it's just a matter of, you're a business owner, you should have some level of organization in your company. And so the documents that they're going to ask are fairly simple. Mm-hmm. My question is, the people that get pre-approved, are they typically buying the property that their business is located in, or are they having to go, like, what do you normally see?
You know, and once again, it's one of those things where I've never done the numbers, crunch it, but if I had to take a gut feeling, it's like a 50-50. You know, most of the time, especially with baby boomers retiring, and there's a lot of older generations that are passing, and the new generations are actually acquiring the properties through trust. It only takes one sibling out of that trust to say, hey, I want my money, right?
Yeah.
And all of a sudden, the owner gets a door, say, hey, you've been a good tenant. We want to give you the right to first refusal to buy the property. I see a ton of that lately.
Okay.
But yeah, if you have to give you a ratio, I would say it's probably like a 50-50 right now.
Okay, so if you're a business owner, so in this case, let me just say that you're a dentist somewhere. Mm-hmm. And maybe you're in a big structure and that requirement of occupying 51% doesn't apply. Mm-hmm. So in that scenario, you may not be staying in that location, but then you get pre-approved with Eddie, you hire someone like me, and then we start looking for
absolutely.
Available properties where we could try to place you. And so what Eddie's saying is that, hey, 50% of the time, they're in a position where they could stay put. Mm-hmm. And other times we need to look elsewhere, which is really not a problem. Eddie, so someone's got the 10% down, they're getting pre-approved. They're gonna wonder, what is the interest rate that we're seeing right now? Like, is it more than multifamily? Is it right? Is it less?
Yeah, well, this is always changing. Rates are always changing. I mean, they did climb up pretty steadily in 2023.
Okay.
Prime right now is at 8.5, and so it was at 8.75. It's down to 8.75. Our CDC, which is a community development center, we're not for profit, right? I'm a 501c3. So we are licensed by the SBA to underwrite, package, and service the loans. So we don't say, hey, this is your rate, and you go to another CDC and get a different rate. We're just almost like servants to the SBA, and to the clients, and to the banks, and to the brokers. So our rate right now is based on a 10-year treasury, and we call it's called a debenture. Not to scare you, but it's called a debenture, the 40% we talked about earlier. Our portion of it for the deals that funded this month was 6.36, which is really good because the rate popped up to 7.5.
Right.
Now during COVID, our rate went below 3%, like everybody else did. So, but the good thing about the SBA program is that it's always going to be under prime. It's usually always under prime. So it's always going to be a better, stronger rate.
Well, just right now you said 6.6. If I go buy a house, if I just go buy a house, I might be paying more than 6.6.
6.36. But
yeah, 6.36. So it's right in line where I would say that's cheap money.
It is cheap money.
It's cheap money.
Yeah, it's great. It's pricing. And right now the banks is remember the thing about rates is that it all depends on your credit, right? So on the best credits are going to get the B of A rates, the Wells Fargo rates, the Chase rates, the U.S. bank rates. B of A is roughly around 5.5. They're aggressive. They're like 5.5, 5.5. They're one of the most aggressive banks out there. Wells Fargo is like right behind there.
Okay.
So you have all these great banks who have really good rates for good cash flow. But then there's all these other banks here, right? If your cash flow is not as strong, or if you're in a specific industry that's a little bit more higher risk, like a gas station or something that's really higher risk, some banks don't like to do those deals.
Right.
So then you have banks over here that will do maybe more like in the 7% range, upper 7s, mid 7s. And then you have other banks over here that are higher risk clients, right? Clients where the deal barely cash flows very heavily on projections. Now that's going to be anywhere between 8 and maybe 12% or 11%. But that's only on 50% of the loan. But our portion as a debenture of all CDCs is right now, for this month, was 6.31, and it changes every month.
And so if you're watching this and you're like, okay, a lot to think about, but a lot of times in life we have anxiety, and most times that anxiety is because we don't know something.
Absolutely.
And now let me ask a question, because I was going to tell people, let's do away with the anxiety. You're a business owner. You're wondering, do I qualify? Reach out to Edi. Which reminds me, we have nationwide reach now. In fact, we have so many people supporting our channel in just about every state, and I appreciate everyone's comments. Really appreciate you guys helping us get to 10,000. Can you do loans? If someone's watching this and say, well, Edi's in Southern California, can he do a loan in Texas?
We partnered before with other CDCs. We find a transaction. We've been doing transactions in Arizona and Texas. So it's all about our partnership, and our network as the CDC as well. We have other CDCs that call us from other states too, say, hey, you're licensed in California. Can we team up on this deal? So the answer is yes. There's a way to go about it.
Got it.
Obviously, there's SBAs nationwide. So I'm getting calls from New York, from Nebraska.
So you could service those type of calls.
Well, I can service the calls, absolutely.
You could service the calls, and then what you're saying is you might have to refer or partner up with someone to be able to make it happen, but it's not going to be at an expense passed on to them.
Absolutely.
It's all going to be the same.
Yeah, and it's all service, right? So if I get the call, I'll be the one helping you with it. I'll make that transition very smooth for you.
Right. Mm-hmm. Someone might want to know, hey, Juan, you're not asking the hard questions. So let me ask what someone might say. What are the risks and challenges involved with SBA?
I think the biggest risk is possibly maybe being an owner user. Maybe at one point you're 100%, and then maybe your business took a turn and now you need less space and you're renting less, and you get to the point where you're under 50%. And then, so you're going to be at that point, you're going to be not complying to the rule,
Right.
I don't see it often, but that's one thing you got to take in consideration. The other risk that you might have is that maybe the rate of the bank that you have, maybe it's a higher rate, so you might be stuck with a 3-year prepayment on that rate.
Yeah.
But in general, it's very low risk. I can't think of anything that's going to be
this horrific thing. Yeah. And in Edi's case, the one that you just told us, where someone buys a property, and let's just say they bought a warehouse and they occupied all of it. Well, now the business has changed. That's what happens sometimes with businesses, and they need less space. Someone might be watching this and say, hey, does that mean that loan gets called, or do I lose it? Like, what happens? And I know it doesn't happen often, but what would happen?
I would think that happens. Doesn't happen overnight.
Yeah.
Probably something that happens after 5-7 years of being in business.
Yeah.
You pay down the principal so much. and you can just refinance the property at that point.
Okay.
So there's always a refinance option to maybe pull out, and then hey, there's enough equity in there to go conventional now.
I want to get into some misconceptions. Some people think that it's free money. Would you mind?
No more PPP. No.
Yeah.
No, it's not free money. It's government money, right? So there's nothing free about it. There are fees involved on our portion that can be added into as part of the loan. So out-of-pocket costs are relatively low. We can finance those costs into the loan. But it's definitely, like I said, it's a government loan. The bank does 50%. We're doing 40. Not saying we, because I'm the CDC. Once again,
Right.
I'm the steward for the program. I'm a community development center or corporation. And the government's going to do the 40% at a rate. So the rate's always going to be something, 6.3. Even right now, for example, you have disaster loans. What's a disaster loan? 3.75, 30-year fixed. So they're reasonable terms.
Right. Sometimes people think, or one of the misconceptions is that it's only for small business. But you're dealing with some very high net worth individuals and big businesses. I mean, just maybe talk on that.
There's parameters, around like how much liquidity. If someone has excess liquidity of over $5 million, I think they got rid of that rule actually recently. Okay. But if we're dealing with businesses that are $50 million, $80 million in revenue. We have to look at some things regarding proportion to the employee, to the revenue. There's some little rules, but you don't really have to worry about that. I mean, part of the pre-qualification process is for me to review that and give you that pre-qual letter and say, hey, look, we got the green light. It's eligible in regards to the eligibility requirements. Number two, you have the cash flow to support the loan request.
Got it.
So it's not, but yeah, you're right. I mean, the majority, when people think small business, they don't realize that it includes bigger companies too.
Bigger companies. And that was the message that I wanted to say. I know you kind of gave us a projection right now of like some of the big businesses and what they're bringing in. Someone watching, if they're thinking, is there a loan that's too small? I mean, let's just say that you're looking at a office condo for $200,000. Like, can you get an SBA loan for that?
The company I work for, we're very efficient. We're very fast in what we do. We do hundreds of transactions a year.
Yeah.
So, for me, and also I can talk about my leadership in my office and the company I work for. We want to help. We're not sitting here going, oh, the deal's too small. I don't have time for you. I mean, I love money. I say this all the time. I love money like anybody else. But I love helping people even more. So if you have a small transaction, $400,000, $500,000, I think Randy and I are working on a smaller deal.
Okay.
We're always going to look at those deals. What's better fit for the client? If it makes sense for the client, go 504. Hey, it's one more thing off another person I'm helping out that year. So I love helping the smaller clients.
One thing that I like, so it's January 2024, and if you were to ask me how's the commercial market, I would say the commercial market is probably not as strong. Now you might say, well, then why would I want to buy it? Well, because it's not as strong. So right now you can negotiate.
Yeah.
So make sure that you align yourself with an experienced commercial broker who has experience with SBA loans as well, because you need that experience to help negotiate and kind of navigate that process. Someone might ask, some people think that it's not for startups, but you're telling us that you could legitimately be a startup and maybe qualify. Talk to us about that process.
Yeah, I mean, it's not something that happens a ton.
Okay.
It doesn't come through my desk a lot. But I mean, people do get the idea like, hey, I'm going to start a t-shirt company. Let me start up. So a lot of times when they do a startup, people are not looking for a startup to buy the commercial property. They're looking for a startup loan to help them with the working capital, to buy the equipment, for the marketing, for the t-shirts, for the material. That's typically what the people's perception is of an SBA loan. Hey, I'm going to go to the bank and get an SBA loan for $50,000 or $100,000. But to do a startup loan to buy the property off the get-go before it's leasing, right? So if I'm a manager at a bakery and then I don't want to sign a 5-year lease, I'm like, I actually want to be aggressive. I want to just buy that property.
Yes.
Then yeah, that's technically a startup loan, right?
Right.
But the startup loan is to buy commercial property. Most likely the client might want to use their cash. They're going to use that 10% down, conserve the cash for the actual operations of the business. So yeah, we can do projection basis deals on those. Now, I mean, they're not easy, but we're going to really focus on the experience of that individual in that type of industry.
Let's, Eddie, thank you for that. If someone submits an offer, they're working with a broker, they find a building, they might want to know, how long does it take to get an SBA loan? Okay,
well, great question again. And this is where every CDC is different, right? I've worked at a different CDC. I'm working at the CDC now. It's fast. It's faster than most people realize. I always joke around that I feel like I'm in a Formula One car right now.
Okay.
Meaning like the office and my personnel that I work with, that works in my team, that supports me, it's kind of like being in the Marine Corps. Like I'm Special Forces, I'm jumping off the plane and they're helping me with anything I need. They'll put all the aircraft I need. If I get a full package on Monday, for example, I get the pre-qual on Monday and the client signs off on it and they want to get me we'll give them the needs list of all the items that we need. We can order the appraisal and the environmental within 24 hours. We get bids and whatnot, we help them out, or we let the bank do it. But the underwriting process, it takes maybe about 3 days, maybe 4. And if we really need to, we can squeeze that even to like 2 days. If I have maybe a silver bullet, something that needs to happen, maybe something fell through. But about, let's just say an average 3 days to underwrite, the SBA right now, and when they get the package submitted to them, it's only taking them 2, max 3 days for review. Review meaning they review what we sent to them, and they give us the approval letter. And then boom, you have the approval letter, we give that to the bank. The bank's gonna get more comfortable now, right? The broker's gonna get comfortable, right? What's loan contingency usually? 30 days, 2 weeks, 3 weeks?
Well, that's kind of what I'm asking. Like if someone's watching this video and they're like, hey, do I ask for a 60-day escrow, a 90-day escrow, just to kind of give us some guidance?
Yeah, no, I mean, I think these are moving pretty quick right now. I mean, a 45-day closing is pretty realistic because, you know,
at the SBA level.
At the SBA level.
Okay.
And most of the time we're waiting for the bank, not us, because, you know, we typically don't fund the deal till afterwards. But to get the approval done and close escrow, about 45 days is what I'm seeing right now.
So there you have it. I mean, if you were to buy an apartment building, it's going to take 45 days or even longer.
It's at par with it, yes.
But just remember that this is a government program that it really is incentivized to keep business owners continuing to invest.
Absolutely.
And it's almost like this. They're helping you build wealth is the way that I look at it.
Absolutely. You know what I think about a lot? I went to the DMV this morning to renew my license. Today's my birthday. I was there for about 55 minutes, no appointment, right? But my perception, I already knew that. I was like, hey, you know, my perception is that the DMV is slow, right?
Right.
We don't worry about it. We're on our phones, we don't care about it. But the CDC, the reality of it is like walking to AAA and doing your job, you get out of it in 15 minutes. That's how fast SBA is.
Got it.
So the people's perception is like, oh, it's an SBA loan, it's gonna take forever. Maybe during PPP, during the COVID and whatnot. But the things are moving very quickly right now.
Eddie, how many years do you have helping business owners at the SBA level? And I know you play different roles, but I mean, because you have extensive experience.
Oh, absolutely. You know, I came as, after the Marine Corps, you know, I worked for a company for 5 years doing equipment financing in downtown LA, just cold calling middle market. And then I got a job as a commercial loan officer at Wells Fargo. I did that for a few years, and Marine recruited me to B of A, and I worked at B of A, and then I started a couple of businesses after I got my MBA, and I worked back at Wells Fargo. Those years combined is around 15, 16 years of experience. And so what happens is that, and I'm gonna explain this real quick, because there's a lot of bankers, right? The guy at the branch, there's your business banker who calls you up, checks on you, relationship manager, business development officer. But then you have your SBA guy, right? Your SBA guy at Wells Fargo, I know these people, right? I have relationships with them. It's like it's a smaller group. It's like there's like the more specialized you are, the less there are. So a lot of times I get calls from the client saying, "Hey, Eddie, I'm working with my banker. He's working on my SBA loan." I'm like, "Well, who's your guy?" "Oh, it's the guy at the branch." That guy at the branch sent a deal here to another person there. And so in reality, they're not getting the streamlined communication, right?
Got it.
So they're working with me first, then they're banking with Wells Fargo or B of A, whoever they're banking with. It's almost like I have direct connection to their SBA guy.
Right.
And then we're speaking at a high frequency level without going through this right here. You know what I'm saying?
Sure.
So if that makes sense, and that's the type of experience I have where I'm really just focusing on working on SBA 504.
And that's what's going to help anyone who has those types of questions is to reach out to Eddie. You have really nothing to lose. Eddie, is there anything else that you want to tell us? Because I know we were having lunch earlier and you said, hey, this is happening. And I'm like, let our viewers know and just tell us what that is.
You know, I think right now I get the image of like everything went really hot, right? Rates went up really high. Everyone got super scared. You know, prices went super high, and everything now is kind of slowly descending. Right, the dust is settling. I'm starting to see more offers. I'm starting to see more activity. More people calling for pre-qual letters. So I feel like someone's hitting the piñata again. The candy's starting to fall out again.
Okay.
So we're only in January. So I think around January, February, March, you know, we have a lot of people haven't filed their 2023 tax returns, right? So people are still putting together numbers. They're seeing the results, and their leases are coming up. And I think last year they were like, you know what, we're priced out. I don't want to pay that much money for the property, especially now that the rates went up. Because the prices went up, rates went up, and nothing changed. So now we're seeing rates came back down, and it's almost like the price is going to fall back down. And these two things correlate to what thing? payment, right? High, high, payment high. Low, low, payment low. So I think people and business owners are starting to get excited. You know, they're seeing their lease coming up. Maybe, hey, that property I made an offer that I lost on, maybe let's give them a call. See that they're willing to maybe do something.
Sure.
So I feel like this year is going to be very interesting with the market. I have a feeling it's going to be a really good year.
Talk to us. You were talking about something having to do with the refinance that
yes.
process. Talk to us about that.
So let me talk about something. And remember, I was on the other side watching this video, the last video that you did with Andy. So it's always interesting because the moment something's not right or incorrect, because there's, we're humans, there's errors. We're like, hey, that's not right, that's not right. Or, hey, they should have said this or they should have said that. I will say something though. The last few years, the 7A program, when I worked at Wells Fargo, we had a 25-year fixed 7A program, right? The bank did the entire thing, no CDC involved.
Okay.
It usually requires 15% down payment. That's the only trade. Like you have to put in 15%, or you can put 10% down, but you have to put your house as collateral.
Got it.
So that's a trade-off. But you get 25-year fixed money, very low rates. B of A, Wells Fargo, maybe and Chase. Those are 3 banks that does 25-year fixed money. Everybody else, most other banks out there only do 5-year, 10-year fixed, right? Like the banks over here in this section. And then you have a lot of 7A loans that are variable. They were variable from the very beginning. So they were at 5% 3-4 years ago. And these clients are now at 10%, 11%. So the SBA recently allowed for the refinance program. Before, when I was at the bank, there was no such thing as a refi program. So with the refi program is that the 7A loan now can be refinanced with a 504 loan.
Got it.
Which is great now because I'm bringing their rate from 10% down to 6.31. And the bank's bringing their payment all the way down. So we're able to refinance those loans.
All right, so here's what Edi's saying. Now, I know it's a lot of information, and from the very beginning we said, hey, there's 504 loans, which for the most part stayed the same. Mm-hmm. What Edi's talking about is at the 7A level, depending on the type of business and depending on the type of loan that they got, could have been variable, meaning that it's going to change. So when they signed up, they were probably at a very favorable interest rate.
5, when everybody was at 3 and 2.
Okay, so they were probably at 5%. What Edi's saying now is that business owners' interest rate could have doubled in some cases. So now it's 10%. Mm-hmm. And so before, SBA did not have a program to refinance this loan out and put them get them out of the 7A back to the 504. Mm-hmm. But you're saying that's a new program then?
Right.
Okay. Mm-hmm. Okay. And so that's going to be this really beneficial thing that if you're over here struggling, like, oh my gosh, I got this, a certain type of loan that now keeps changing, reach out to someone.
Yeah, and then, these clients are so happy to see me helping them refinance. One thing, right, that I'm pinning their payment out and bringing it down. Yeah. But I'm also doing cash out too. Okay. For working capital and for expansion. So we have transactions where we're pulling $300,000 of cash out because the equity's there. You know what I'm saying? Got it. So that's also a huge thing.
And that's only on the on the 7A, but it's only on the 7.
Well, it's a 504 refinancing it. So we're going to pay off that 7A. Yeah. But there's enough equity in there where we can still do cash out.
If there is enough equity. So someone could lower their payment, pull some money out for whatever they might need, equipment, et cetera, and then be in a win-win. Oh,
absolutely. It happens. And it's happening now. And I love seeing those clients. The face that they have when that deal closes is like, Eddie, this is amazing. Like, you helped me. You brought my payment down, you locked in for 25 years, and you gave me $300,000 of working capital. Got it. I mean, it's like, cool. It's so much fun seeing doing those transactions.
Perfect. For anyone watching this, we're going to make sure to have Edi's information down below. Edi, by the way, is bilingual. He does speak Spanish.
Hablo español.
So listen, we're in Southern California, and there's a lot of business owners that sometimes could prefer just to speak in a different language. In this case, it's Spanish, but even if it's another language, I'm sure someone in Edi's office could help you. Mm-hmm. So feel free to send him a message. We're going to have his information. Now, that's it for SBA. Okay. All right. We're going to talk about, so Edi served in the military, fought in Iraq, and we're going to share this story.
I've never shared this story on a camera, so this is going to be interesting. And people have been asking me for years, and this is going to help me just get it out of my back.
Let's go.
I'm tired of telling this story.
Let's go. Right. Tell us what you can about what this is and where it came from. Yeah. What you're able to tell us.
Well, first of all, I'm not sure who's going to be knocking on my door after they see this, so I'm a little bit worried about that. But let's see what. So hopefully it's just a fun thing. Nobody can really prove anything at this point. Go ahead. But no, this is something when I was in Iraq, we were the first group of Marines that crossed the line. And, after being there, our mission was over. We're ready to go back. And, they were statues. Every time we went to a small village or a town, the people would come to us and like they were so thankful for us for being there. You know, we got liberated from a dictator in the southern parts of Iraq. So they would call our vehicles, and the vehicles would come over. The engineers would come and pull the statues down. And so, you know, for us, you know, we're just moving along and going to our next mission, going to our next mission. But every once in a while, like when we go back and refuel, get our ammunition, we get our chow, we would have these kind of square area blocks all gated.
Yeah.
And so the gated areas are pretty long. It's almost like 5 blocks wide. You know, it's a long thing. But they have the chow food over there. They have the ammunition. You have the sit call. So we were coming back from eating chow, and I saw this statue that the engineers had broken in pieces. The head was over there.
For people who don't know, whose statue is this?
This is Saddam Hussein's statue.
Saddam Hussein's statue.
Right.
In what area?
Kind of like the east-south side, kind of like near Basra.
So the people had toppled it over.
Right.
And you're in the area and you see this.
Well, the engineers brought it back into our area. They
Got it.
chopped it in pieces, and I think they took the head, because we're the British and the Irish.
Yeah.
They cut the head off.
Got it.
And they cut it in pieces. So there's this mantle body, you know, with
Right.
the chest was cut off, and
Right.
and you have these really powerful saws, you know, because this is really thick. So
Yeah.
anyhow, my friends and I were walking by, and I grabbed it, and I'm like, I'm taking this back. And of course, what did my friends say? You know, you're freaking crazy, Santos. Like, there's
Right.
no way. They were making fun of me the entire time. So they left me behind, and I'm carrying this thing over my shoulder. And all of our vehicles are parked, like one side to each other. And then everyone's playing cards. It's 120 degrees out there.
Yeah.
It's hot.
Right.
You know, we're on shorts. And I'm carrying this thing, and everyone's just kind of looking at me like, what an idiot. Like, there's no way you're going to take that home. And I'm Eddie. You know, people who know me, they know I'm a little crazy. And I was like, dude, I don't care how this is going to happen, but I'm taking this home. And so they made fun of me for days after that. And sure enough, you know, after a long story and CIA involved and an injury, I had an injury out there, I was able to bring this back home. So now my friends now beg for me to bring this at every Marine Corps birthday. They're like, where's the hand? Where's the hand?
Yes.
So don't ever give up, you know?
If
people tell you no, you don't ever give up. You never know.
A mutual friend had shared the story with us, and I said, Eddie, it has to be part of the video. We're going to be interviewing you. Let's tell the story. It's a great story. Thank you again, Eddie, for your service. Thank you for sitting down with us today
Absolutely.
to talk about SBA. So guys, if you're a business owner and if you have questions, a call, an email over to Eddie. His information is going to be below. It's not going to cost you anything, but find out, because it could be that you've been watching my channel and you've been wanting to buy your first multifamily, and it could be that after watching this, it could be that your first investment property is for your business and it's a commercial.
100%.
And there's nothing wrong with that. And
Absolutely
there's absolutely nothing wrong with that. So thank you for watching. That's all for now.
Thanks, Juan.